Another week has come and gone, Dad, and we saw another 1% decline on wholesale used car prices. One of these days, retail prices are going to drop too. Let's take a peek at the data and talk through it. How's that sound?
Sounds good to me. You can see the car segment dropped nearly another point this week. It was a slightly slower depreciation from the week before. And when I say slightly, I mean slightly. The truck segment saw an increase in the depreciations going on, and the total market saw an increase nearly 1 full point. And last week it was 0.85 and 0.9 something the week before. I mean, we're talking a significant reduction in wholesale prices being paid.
4 weeks, about 3.5% to 4% of used car values lost. This is different for different segments of vehicles, but Dad, we've had multiple videos go out, and heck, the title of this video might be, hey, now it's officially a buyer's market. This is not to say that used car prices are reasonable. You've got to remember last year, used car prices went up 40, 50, sometimes even 60% on the retail side, and on the wholesale side, 30, 40, 50% as well. That being said, you now have leverage as a buyer because, Dad, take me back to your days in the dealership. You are paying an interest payment every single day, floor plan cost for that vehicle sitting on your lot, and you're watching it lose value day in, day out. It's not like the good old days 6 months ago where you could just go to the auction and sell it for more money than you bought it. Dealers now have some pressure to actually negotiate again.
Yeah, because the used car manager knows that if he had to take these vehicles to the auction to unload them, he's going to lose money. Okay. And I don't know how to break it to anybody, but used car managers get paid off of profit, not loss, profit. So they don't want to have to take a wholesale loss that's going to count against the profit they're going to get paid off of. So if you're a dealer, if you're a used car manager and you're checking MMR every day, you're seeing what's going on at the sales every day, you can see the downward trend. Okay. You know that every day the value of your inventory is less tomorrow or less today than it was yesterday, and it'll be even less tomorrow. So if that's the case, yes, you can ask all the money in the world for something. Doesn't mean you necessarily expect to get it. But, it's a good starting point for negotiations. And it should lead, in some cases, not all segments, but in some cases, it should lead to more leverage for the consumers to try and get slightly better deals. Now, are they going to be better than the 40% retail increase we've seen? Well, yeah, but they're not going down 40%. But if they go down 5-6%, that's a win.
Dad, one of the
regardless of what anybody says, that's a win.
One of the things that Black Book tracks is the retail listing price of used vehicles. And you can see it on the graph right here, Dad. It's the green line. They've barely ticked down. 2% is what we've seen in the used retail listing market. That is because dealers are going, it's been 4 weeks of significant declines. Dealers are still going to advertise very high prices, although on the price history on joinYAA.com, we've actually seen vehicles where in the price history, you can see it over the course of a couple of weeks, advertised prices have started to go down. This is not to say that you're going to start seeing huge decreases in advertised prices. You should go in and try and negotiate the significant price decrease because dealers now, you know this from watching this video, they have pressure. They can't just turn around, take it to the auction and sell it for more money like they did before. And Dad, we're also starting to see inventory levels tick up just a little bit. Retail inventory for used vehicles up 5% this year. Not a huge number, but that's an indication that vehicles are sitting for longer. And if vehicles are sitting for longer, then they're going to be paying more interest payments on them. They're going to be paying more floor plan costs, which is another incentive to want to discount and sell, get rid of the piece of metal.
Yeah, I mean, between the fact that the value of the vehicle's going down based on what's being what we see at the auctions and the interest cost of holding on to that car going up, it's like a double whammy. So it makes so much more sense for a dealership to settle on a reduced price, retail price of the vehicle with a retail customer, and hope that you can make back some of that money in the F&I office, than it does to just take that car to the sale and have lost the money on the floor plan interest that's paid and on the reduced value that you're going to get for the vehicle at the auction.
Friendly reminder, the bright lights that I got on me, the way we keep them on is through our YAA membership. People like you who are going out negotiating car deals and want to get some help. Also pressure test their deal worksheets, things like that. If you're going to go buy a used car in this market, use the code IFS because it's Inflation Fighter Special, I think is what you came up with, Pops. Anyway, use that code, get 20% off if you become a member. Now, Pops, the lights are staying on. Let's break it down by segments of vehicle. Luxury cars, prestige luxury cars continue to see the steepest declines. It's almost like we're back into, reality where, I don't know, Mercedes-Benz S-Classes, BMW 7 Series, Audi A8s, they depreciate like rocks, like boat anchors, because that's what's happening.
And the thing that surprised me the most was the decline in compact cars, which, if that continues at that rate, that should bode well for people in the entry-level vehicles into the market, so that we can get more people back into the market.
100% agree, although we are still seeing pretty fierce competition in terms of price attainable vehicles, 25,000 and under, 20,000 and under. But it is a positive sign to see compact cars lose value week over week at the wholesale auctions. Full-size luxury crossovers and SUVs, same story as prestige luxury sedans and luxury cars in general. Really significant declines. Last week was about 2%. This week, another 2% decline. That is a significant amount of money being taken off of the price tag for a, GLE, Mercedes GLE, or an Audi Q7, something like that.
If you look at that for full-size luxury crossover SUV, it's been about that number decline, an $800+ decline week over week for the last 4 weeks. They've probably lost $3,200 to $3,500 in value. So if you're a dealer and you're sitting on a Lincoln Navigator, and you're seeing this going on, well, you've got to retail that rather than, take a $4,000 loss at the sale. So there are some pockets, some vehicles that you can get some better deals on.
And it's worth mentioning, and also I should have said GLS, the Mercedes GLS. Yeah. That's their full-size one. It's worth mentioning, if you use our car search, it's going to tell you days supply of inventory. It's going to tell you how long a vehicle's been on the lot, been on a dealer's lot. Like, there's a lot of good information there because this is regionalized. 100%, there are pockets of this country where what we're presenting here does not apply. It 100% does not. But as a whole, Mannheim auctions, ADESA auctions, the whole 9 yards. Black Book looks at all that data and more, and they come up with what's going on, generally speaking, in the market. So go use the car search to figure out what's happening in your neck of the woods. Now, Dad, the final thing I want to bring up here is essentially their notes on what's going on in the wholesale market. We're not seeing that many 2022 vehicles make it across a lot. Most of the used cars that they're seeing at the auctions are 2018 to 2021s. So a lot of we used to see in these wholesale reports new vehicles essentially being run at the auctions because they could just sell them for more money. So that's a good sign. These vehicles have had average conditions with average miles. That's also a good sign because a couple months ago that sentence read, these vehicles are in disrepair and they have 150,000 plus miles on them. So it seems like just a little bit that we're returning back to some form of reality in the used car market. Will that reflect itself in used car retail prices? Probably not for another couple weeks. Is it still a buyer's market? 100%. Go in and negotiate. If you've seen that Lincoln Navigator's been sitting at a dealer's lot for 30 plus days, you know that they probably spent $3,000 to $4,000 too much to buy it. Go negotiate. Like, this is great.
And go share with them the information that's on the screen. So they know what the values drop like a rock, and make them aware of the fact that the value has gone down significantly over the last 3 or 4 weeks. They'll either throw you out and hope that they get an absolute moron in there after you, or they'll realize the position they're in and they'll work with you to try and figure out an acceptable deal to both you and them.
Now, final reminder, if you are going to sell your car, yesterday was the day to sell it because used car prices, like we're saying, are going down. So that means trade-in values are going down. We put on our website, you put in your vehicle information in one place, either your VIN or your license plate, and you'll get offers from 10 to 15 different dealerships that are a part of the program. So use that. Just go to joinyaa.com, click on the sell button. No spam calls, none of the BS, but it's a great way to see what your car's actually worth. The cash offers all in one place. So you don't have to go to all the different sites. So take a peek there. All right, Pops, we will be back next week with another update. I I'm telling you, man, can we make it 5 weeks in a row? Because even when you look at the chart, Dad, this is the first time we've had 4 weeks in a row with this type of significant decline in about 2 years. Okay, so this is pretty material stuff that we're talking about. We'll be very interested to see what happens next week.
Absolutely, and I would suspect we'll see a further decline next week and a further decline the week after that, because that'll be Labor Day.